I'm Dan Fitzpatrick at StockMarketMentor.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to make our money, right? Well, good trading takes more than just pushing the buy button the next morning on a stock you saw on TV last night. I'm here to help you make money on these three stocks I saw on TV. Today, I want to start with Tesla. Now, here's the deal. They've had good news, bad news, and through it all, the stock has just continued to move higher here since bottoming in early February. Here's the dealio. They have on their new car, they've got a boatload of orders that, of course, they're not going to be able to fill for a long time. Then we just hear today that their Model 3, which I think they've only got like 2,700 cars out there, it's a recall. Yep, that's right. They're taking a mulligan on it and telling their consumers not to ride in the third seat until they get this fixed because the latch might not hold. Okay. Look, I'm not going to dog on Tesla about this. Frankly, I think they dodged a bullet. Not that I would expect them to cover up this kind of thing. I think that was a Ford deal, if I'm not mistaken. But the thing is, for them to have something like that and not have any fatalities or anybody injured on this, that's a good thing for this company. So I look at this, frankly, as a credibility builder. However, with that said, I'm also looking and trying to figure out what the next catalyst for this stock to move higher would be, and I just can't find one. Now, I do not advocate going against the trend. In other words, I don't advocate shorting into an uptrend. I just don't. I know you can find the top sometimes, just like buying into a downtrend. You can find the bottom sometimes, but there's a reason why they say the trend is your friend, and it's because it sticks with you a lot longer than you think it would. But here's the thing. I'm really, really tempted to short Tesla right at this level and then keep a buy stop right up here. Hang on, I got the wrong color and I'm just being real stubborn today. I'm going to make sure it's the right one. Literally keep a buy stop just right up a little bit above 270. It just seems to me like when you look at this, okay, we see this is like a climax high it looked like with all this volume. And then on the last 3 days of distribution, it's all higher than average volume. So that tells me that the accumulation is kind of morphed into distribution. I wouldn't be buying Tesla on this dip. If you do, just make sure you've got a risk management plan in place because I think you'll probably need it. Okay, Newell Rubbermaid. So they're buying Jarden. And Kramer was talking about this in some detail last night on Mad Money. And the upshot is this. He likes Newell. And so do I. I got half of my containers are in my bachelor's drawer with all of them there. Love Newell Rubbermaid. He thinks this company can execute when they've completed the acquisition, and I really can't disagree. Here's the thing. This company, this has a fairly high short interest, and keep something in mind. Don't just look at the short interest and say, oh, we're going to see a short squeeze. This could seriously be one of those instances where you've got arbitrageurs who are short Newell Rubbermaid, but they're long Jarden. Don't know whether that's the case. Here, let's go to the right chart. Don't know whether that's the case, but I can see that happening. Bottom line, I think Jarden, if it starts moving above 60 bucks, you're going to see Newell Rubbermaid moving above 46 bucks. Either one of them works for me. I'm just with Kramer, though. Take Newell Rubbermaid, take it on this weakness. It's still kind of technically in this consolidation, but this to me looks like a pretty significant bottom. I think ultimately this stock goes higher. And then the last one is Alcoa. They reported earnings after the bell. Their revenues came in a little light, but they had an earnings beat. Of course, nobody really expected much of them. So, when nobody expects much of you, it's kind of easy to exceed expectations. Still, stock is down, but it's down right at the 200-day moving average. I feel like this is a stock that this could, I'm not an aluminum guy, it's just me, although I have some titanium in my knees. But I think if you want to be looking at Alcoa to buy, this could be your opportunity to buy it, seriously, because you can see the stock. If you've been studying my chart work at all, you know I like these kinds of situations, these kind of conditions when a stock is running right along this almost just picture perfect, right along the 200-day moving average within a big downtrend, 50-day moving average almost ready to cross over. So all we're looking for is a spark to push that thing higher. We didn't get it on earnings, but what you are getting is an opportunity to buy this at a low risk level. So you buy it near the support level, and then you keep a trailing stop just right underneath the 50-day moving average. So if this stock is down tomorrow morning, and it probably will, and maybe you're looking at this video on the morning of Tuesday morning, if it's down here and then it holds, that's when you can buy this stock. And by the way, if you buy it and it just goes back to the prior day's close, that's a 5 or 6% return in not very long a period of time. And if it just goes up to the top of the range, that's an 8% return. So the bottom line is I think this stock is consolidating, and as long as this level holds, it's going to give you a good entry to buy this tomorrow. If it doesn't hold, by the way, forget what I just said. Okay, that's it for today. I'm Dan Fitzpatrick at StockMarketMentor.com. I'll see you next time.